If we're looking at this over a 5-year horizon, I do not think that it's the peak. I think there's just a lot of room to run. This company's $300 billion of a $70 trillion market. So kind of hard to argue its peak given that.
Hi, everyone. I'm Gunjan Banerji.
And I'm Telis. We're back with another episode of Take On the Week.
So this gold rally seems to have sputtered a little bit.
I mean, yes and no. Gold did have one of its worst days in decade plus. The price dropped by something 5 to 6% in one day of trading this past week. That said, it's still over $4,000 an ounce, which was kind of the Maginot line of like, wow, gold is really at an all-time high. So I wouldn't say that the gold trade has unwound, but clearly it ran out of steam given how aggressively it had been trading recently.
I wonder to what extent the speculation that's emerged around gold during its big rally has impacted some of the declines recently, right? You have leveraged long and short ETFs. These are ETFs that can turbocharge your exposure to stocks or gold or bonds, you name it. They've seen so many inflows recently. Gold options volume hit a record, which means that, people were speculating big time on the price.
Well, and that's what you would expect to see in a speculative market. You would expect to see kind of air pockets where suddenly, it drops because there just isn't the same inflow of buying, or that kind of marginal buyer kind of disappears for the day, or people take profits. This is what happens in bull markets. Like you have aggressive pullbacks sometimes on the way to a higher place. I think the question still remains whether or not what's happening in gold is part of this same speculative fervor that we've been talking about in all these other asset classes, or if there's something truly like fundamental behind the trade, and whether it is part of a trade that some people might call debasement of the U.S. currency. Is it something anxiety about credit risk in the markets that's sending people to gold? Like, what is it that's driving it? I don't think that we have necessarily agreement about what it is.
This worry about U.S. assets isn't quite resonating with me right now when you take a look at what's happened in the Treasury market, right? We saw yields on 10-year Treasury notes falling to some of the lowest levels of the past year. Stocks have done so well.
It's interesting that you're saying that, Gunjan, because there's a big debate about what exactly has been driving this gold trade. And some people talk about it like it's a market phenomenon. Other people think that there are more fundamental drivers. I wanted to point to one comment we got on YouTube. This person said what's really fundamentally driving gold is de-dollarization. That is, central banks of other countries moving away from their holdings, backing their own currencies as U.S. dollars and putting more of that into gold. That is something that's been happening for a long time and probably is one of the fundamental drivers of where gold is right now. I'm not sure why, given that it's been happening for a long time, that it's something that has driven gold to where it is today, this $4,200 an ounce, $4,100 an ounce level. That is probably speculation driven, but obviously I would agree that there are a variety of drivers here, and this is probably one of them.
Yeah, I mean, all this frenzy of activity around gold in terms of speculation around gold, right? And ETFs, options makes me wonder, are people buying physical gold?
That's a really good point. And data from the World Gold Council, which puts out reports tracking not just the price of gold, but physical buying of gold in a variety of forms, has in past quarters suggested that gold demand for gold bars, demand for gold jewelry has not necessarily been keeping pace, that's actually been kind of on a downward trend. We'll see what the third quarter data shows. That data, will be coming out in the near future. But what it suggests is that the high price of gold is actually discouraging people from buying gold things. And so the flows into ETFs and other more speculative kind of financial bets on gold are really what's driving the price action right now.
Huh. So it's like the YOLO gold traders driving the price action right now.
That's right. It's not people like decking themselves out in jewelry. It's more people decking themselves out in ETFs.
Oh, I love that.
That's the driver. You can't wear ETFs, though, I don't think.
And I'm curious how this all shakes out with the Fed meeting coming up this week.
That's right. We've got another Fed meeting coming up this week. Once again, the Fed is expected to cut rates, so that's not really the drama. The drama is around what the Fed says, just the commentary about the economy, the composition of the vote, and then also what the Fed says about its balance sheet. The Fed has been sort of draining the economy of money for a while. Now the question is whether or not they want to kind of reverse that and start to sort of let more money slosh around in the system as another way of easing. That debate about quantitative tightening should be an interesting one.
We also have a ton of earnings in the coming week. I mean, I thought Apple's move recently was really quite interesting, right? Like, this is a stock that had kind of lagged other tech stocks. It hasn't been a big AI play, hit a new record recently.
It looks like what's been powering their move of late, they moved into the second largest company by market cap behind NVIDIA, overtaking Microsoft, at least they had as of this recording. And what had been powering that move was hopes for iPhone sales, that the latest iPhone release is actually doing really well and better than the last one. And what's interesting about that is that it's not an AI-related trade. That's just more people are buying, nice expensive phones. Maybe that's an economic indicator in its own right, that things are doing well enough that at least the segment of people who buy iPhones are doing so in big numbers, and suggests that the tech stocks are not only about AI, but also just about tech companies doing well. I mean, obviously AI is part and parcel of what Apple does, but it's not the driving force for them as it's been for others like Oracle, NVIDIA, obviously some of the really big gainers of late.
I mean, it's totally become kind of like a bellwether stock, right? About how the economy is doing. I'm excited to hear your interview about Robinhood and their earnings. I mean, the prediction markets boom is well underway. I thought it was really interesting to see the National Hockey League sign agreements to license its name to platforms like Callsheet and Polymarket. So, these prediction market trades, which everyone wondered, are they going to stick around? Are they going to fizzle after the election? They've stuck around.
Yeah, talk about bellwether companies. I think people look at Robinhood's earnings report for essentially an update on what investors are doing and thinking about what kind of trading they're doing. But also Robinhood has just itself become a very large company. Its stock went up enough and it has become established enough that it was added to the S&P 500 index this year. And so now its earnings are really kind of, I think, a big deal for the market. And given how much the stock has risen this year, it's more than tripled. I think there's a really interesting debate about whether or not that is it itself kind of an echo of what's happening with sort of speculative activity. To what extent does that drive Robinhood? Or is Robinhood just establishing itself as a major financial services company? And how big is their opportunity in not just this market, but in the years ahead? And to get at that question, that bigger question about Robinhood, and also what it tells us about what's going on in the markets right now, we had a great conversation this past week with Christian Bolu. He's a senior analyst at Autonomous Research. He has been looking closely at Robinhood stock and Robinhood as a company. He's put out a series of notes about the company's potential and long-term future, and we had a great conversation with him, which we're going to get to right after the break. Welcome back. We're here with Christian Bolu. He is a senior research analyst at Autonomous Research. Christian, welcome to the show.
Thank you, Telis, and thanks for having me on.
So I'm sure that there's a portion of our audience that sees something like Robinhood Markets, their stock more than tripling this year. They see that and they think, well, that's a bubbly company in a bubbly market. But you recently spent a ton of time looking at the company. You talked to many executives. You published 5 separate research notes, a deep dive, a classic deep dive into Robinhood. And I think you came away with a different impression, that there's more going on here.
Correct. We went down to their headquarters in San Francisco, met essentially the entire management team. It was a fascinating discussion. What people forget is that wealth management, generally speaking, is very demographically aligned. So if you think about Schwab, grew very fast with the boomers. E-Trade was with Gen X. And really, Robinhood has captured millennials and Gen Zs, which is a very big population. And that's a big engine of growth.
So it seems like a big part of your thesis is that Robinhood is now a broader business beyond trading. They now offer retirement accounts. They have a credit card, and a variety of trading services. How much of that, though, is drawing people in by making them interested in trading and speculation?
So, if you look at Robinhood, for example, its actual account growth is not spectacular. So in terms of new customers coming onto the platform, it's not some hyper growth platform. A lot of it tends to be new assets coming onto the platform.
People bringing actual money, not just signing up.
Exactly.
Okay.
So if you look at new asset growth, it's anything from 20 to 40% of existing assets. That's pretty healthy. If you think about a traditional player like a Schwab, that's more like 5%. So what it's telling me is that existing customers are looking at the value proposition at Robinhood and bringing more onto the platform. Talked about things like retirement accounts. It always makes me laugh that one of the fastest growing products at Robinhood is good old-fashioned high-yield savings accounts. Now, clearly, it's still the growth of the business or the monetization of the business is still very much trading oriented.
So how can they afford to pay a higher yield on cash than other platforms do? And I know Robinhood has long had an ethos of basically offering things for free. One thing they try and do, and obviously they charge a subscription fee for Robinhood Gold.
Correct.
Is that enough to allow them to make money on these other product offerings, like paying this high cash yield? How does the economics work for the business now?
The way they're able to drive profitability is a couple of things. One is margin lending options, which are very profitable. They do have a crypto business. Now, crypto is a very, very profitable business as it sits today. Robinhood makes something like 50 to 60 basis points, about 0.5% on each dollar notional of crypto traded.
Okay.
In equities, they make about 1 basis point.
I wanted to just call out something that was in your note that I thought kind of described this interestingly, which was you called it the cyclicality versus TAM. And for those who aren't, readers of this stuff all the time, TAM is for total addressable market. So in other words, Robinhood can take advantage of a cycle. Everybody's trading right now. They're trading. But there's also the size of the brokerage industry.
Let's start with the TAM first. The reason why people get excited about the company is just the size of the potential market is so huge. Just to put some numbers around this, Robinhood today has client assets of roughly $300 billion, which sounds like a lot of money, but it's absolutely tiny.
And $300 billion, like you said, is big, but that's really only like 5% of Schwab's assets, right?
Correct. It's absolutely tiny. So Schwab has north of $11 trillion in assets, and that's total assets. And the total wealth in the U.S. in terms of assets is about 70 trillion. So if you look at Robinhood, they really are just getting started at 300 billion. And why people get excited is if you look at the rate of growth, they're clearly taking new market share and in a very big market with a ton of innovation, the brand value, et cetera. And we've seen this playbook before. If you go back again to the 90s, it was Schwab and E-Trade.
Schwab itself, right, was the disruptor back then.
Exactly. And today, Schwab is basically the biggest wealth manager, at least from a public market perspective. They're bigger than Morgan Stanley, Merrill Lynch, all the banks. They're much bigger than them.
Even though maybe Robinhood is still in that disruptor phase or is in the early innings, as my colleague Spencer Jacob pointed out in his column recently, the market caps of these companies aren't that far apart.
Yes.
Has the market kind of gotten ahead of itself? Is it already pricing in perfection for Robinhood at this point?
I'll unpack your question into two: the fundamentals and the valuation, right? So as I mentioned, Robinhood is 3 to 5% of Schwab's assets, but they're about 15 to 20% of revenues, right? So if you think about that,
so more revenue per dollar of assets.
Exactly. So Robinhood definitely makes more money per dollar of assets, and it's a bunch of things. They have more crypto. They have a more active trader skew. They do more from an active trader perspective. Just put some numbers out there and hope I don't get too technical here. But if you look at the return on assets, the revenue as a percent of assets.
Okay.
At Robinhood, that number is between 1.5% and 2%. So roughly speaking, on every dollar of assets, they make about 1.5% to 2%. On Schwab, it's about 20 basis points to 30 basis points.
Which is 0.2, 0.3%.
Exactly.
Okay, yeah.
And then on an active trader platform like Interactive Brokers, it's about 1%, right? So the real measure is more like against an Interactive Broker than a Schwab because, the Schwab client base is obviously skews a little older, a little long-term investing. They're not trading as much. So just the monetization is naturally a little bit lower. So the question is the gap between like an Interactive Brokers and a Robinhood. And again, that tends to come from things like crypto, prediction markets, the gold accounts, all that tends to drive incremental monetization.
In your notes, you had an eye-catching number, which is you called it a bull case price target. And that was over $300 per share for Robinhood. Now, it trades at around $140 per share these days. How should people think about the potential for Robinhood to reach that level?
Yeah, so inherently with these sort of like high growth, big TAM stories, to believe in them, you have to think about the long term, right? How big can the company be? Now, our base case price target is more like $120. So we're basically saying if you kind of run rate the current growth rates, it's probably fairly valued. But if you start to think about what this company could be over time, you start to pull in assumptions around them growing faster, getting more of that higher net worth, bigger client base, growing the prediction markets business bigger, building a banking franchise and become the primary account to folks. It starts to get more interesting, right? And
so if they execute on what they say they're doing, that's kind of where they could get if everything goes well.
If everything goes well. And that's a key thing is if everything goes well, because the markets have to cooperate with you as well, right? You have to assume that you don't have a big crash, another 22 type scenario again. So the markets have to help you along, which is why we call it a bull case. Now, we put a 25% probability on that in our price target to get to where we think the stock should trade now. So we're basically saying, that sort of like $320 bull case scenario, we're giving them a 25% chance of hitting that, which we think is fair. These things are hard to, be super precise on. But I think it gives you a sense of like the potential.
One of the businesses that Robinhood's in that I don't know, I'm having trouble kind of wrapping my head around is the prediction markets business. It's new. It's kind of early days. You put some interesting numbers around it. You mentioned like based on the volume of trading recently that if you assumed they were getting like a cent per contract, it was like a $250 million business today. And then, you talked about in the future, you could see a kind of a prediction market volume of like $50 billion just kind of for the market. Could that be like a major revenue source for them in the future?
Now, if you look at sports betting, that's been a big boost to trade volumes in prediction markets. There are like a lot of advantages to what they do. There are some regulatory, shall we say, questions around the business, and that has to all be ironed out. But as we stand today, prediction markets are feel like they're here to stay. You're seeing the traditional players come into them. So CME, for example, which is the big exchange where a lot of derivatives get traded on, they are partnering with FanDuel to build a market there. So another company, it's called ICE. They own the New York Stock Exchange. They took a big stake in a company called Polymarket to also build that. So I do think it probably over time could be bigger than just traditional sports betting because of the incremental sort of markets that it touches.
And so when Robinhood reports earnings, what do you think we'll learn just kind of about where we are in the markets these days?
So remember, we already have a bunch of retail brokers that have already reported, the likes of Interactive Brokers and Charles Schwab. So we have a sense of already what the market's like in terms of just retail sentiment. And I think Robinhood probably confirms that on their earnings. You'll probably see a good amount of growth in products that tell you customers or the retail investor is feeling confident.
What products are those?
So example will be margin lending. So as you remember what margin lending is, you're essentially borrowing money to buy stocks. You don't do that unless you think the markets are going up.
Okay.
The other product I tend to look at is securities lending, which is ties very well into the IPO market. The bigger the IPO market, the bigger that product tends to be. I think you'll see really strong growth there. And then also just like, again, what we call organic growth, which is just customers bringing assets onto the platform, which for me is probably the most important metric. And I think you'll probably see solid flows there as well. So I think all in, it will probably confirm that we're in a very buoyant market for retail investing.
All right, we're going to take a quick break. And when we come back, one last question for Christian Bolu. Welcome back. We've got one last question for Christian Bolu. Christian, a lot of people think that the stock market is in a bubble. And people who trade through Robinhood have probably played some role in that, buying a lot of stocks themselves. Have they pushed Robinhood itself to kind of the top of the cycle? Is this the peak for a stock like that?
Well, with these questions, timeline always matters, right? I think, again, given our bull case scenario, if we're looking at this over a 5-year horizon, I do not think that it's the peak. I think there's just a lot of room to run. This company's $300 billion of a $70 trillion market. So kind of hard to argue its peak given those statistics. That being said, I'm well aware that a lot of things are going right just now. The valuation is twice the average retail broker, if you think about them on an EBITDA multiple valuation. So I think, one has to be cognizant of that. But certainly on a long-term basis, I do not think it's at its peak.
All right. Well, we'll check back in
5 years.
In 5 years. see how things are going. Christian, thanks so much for joining us.
Awesome. That was great. Thank you very much, Telis. Appreciate it.